nonsense in the market. Again, you guys, again, that were on here on Friday saw how powerful these zones were. We're seeing those zones pretty well respected again today. What we were talking about again on that, the private live stream this morning with the group, we did come up to this zone here. Obviously, we were not expecting this to hold. We sold back right off to and through that next zone. And what we're seeing on the charts right now, guys, on ES, does not look like the market is going to make a sustained move to the upside. And we could be in, finally, for that nice move to the downside across the broad market that we've really been looking for here to wipe everything out, to make sure that we can then get back to kind of fun mode in the market after this big period of consolidation that we've been in. Like I've been talking about, I just really don't see any reason or argument for why the market would continue higher from where it currently is, especially in this big range that we've been trading in for a while here. It does make sense that we are in for a pretty significant move to the downside. Next stop here is going to be 67.50 about on ES. So we'll see what happens if we can get there. I mean, today would be nuts if we did that. If the bottom dropped out of this thing, which it easily could with the structure that we're seeing on the chart right now. But we'll kind of go from there. And then taking a look at what's happening in utilities, again, like how would we expect to see, well, this is a better way to put it. What we're seeing out of utilities, REITs, and a couple of these other safe havens, like I believe even healthcare is up today. Yeah, I mean, it's flat. It was up a little bit more earlier. But this is just the result of our idea, just looking at the broad indexes, that market participants are going risk off and they're not looking to take on that type of risky behavior. That's why I made that YouTube video for you guys last week, that this move up in utilities here is not good. This is not what you want to see, and it's not what you see out of the market when you are about to have sustained moves to the upside. When you start flying into like higher dividend paying utilities, water, electricity, things that are going to continue to witness pretty significant levels of demand during times of economic uncertainty, like we're seeing here, that is not the best sign. Then you take a look at the REITs, like I think we looked at this one before, realty income. Again, guys, these REITs still have a bid on them with pretty decent yields on them. Like you see realty income right here is paying a 4.93% dividend yield. You see a lot of these other REITs paying significant dividend yields here because, again, that's what they have to do. But people are hungry for yield and looking for that next place to park their money in the market after we saw that big rotation into gold and silver throughout the last, let's say, 6 months here. So I wouldn't really I think a lot of people are going to get really worried about this market right here, especially because a lot of the high flying names like the Robinhoods, like the Bmnr, a lot of these other names, Sofi, have come down so significantly from their highs. But that is why when I come on and I sit here every single day and so many people think that I'm being an asshole, this is the exact time frame where all of that starts to make a lot more sense to everybody, because then they go, oh wait, that makes sense. I shouldn't be buying stocks that are up 300% in a month, because when the market starts to shift into this type of period, those are the ones that get hit the hardest, right? So now we're starting to see that any of those other big names, like just think about Sofi, for example. I owned it at 660. I don't care what it does here. Zero. I have no care in the world. Then I gave it out at 1360 again on the weekly breakout. Where is it right now? 19? Okay. Like it's things like that. Like when I talk about there's a time and a place to be taking action in the market, and it doesn't happen all of the time, I hope that has made sense to everybody here. Walmart and Clorox. I don't hate that, but there's another element of this that I think people are missing here. But ladies and gentlemen, it is that time of day again. Say good morning to somebody in the live chat. If you guys would like to say good morning to me, would love to receive some good mornings over here. If you guys are new to the group, new to the stream, new to the channel, let me know. Love to welcome you guys in here. And as always, everybody, make sure that you guys are hitting that like button on the way in. Costs you absolutely nothing to do it, but it helps me out a whole lot. Spreading these streams out to as many people who actually want to learn. We got a lot of slackers on the like button here, and that's another thing that, like, when I tell you guys I have certain metrics of, like, you can just track retail and say, like, oh yeah, this is kind of what they're feeling. Well, the like button's one of them. It's easy to see. The views on the live stream, when people get scared and stuff, everybody freaks out and runs away. But we do have a 200 like goal on the stream. Let's see what we get. I'm scared. I need an adult. So Walmart and Clorox, I personally, so this is the thing. People are looking at this like a value rotation. Walmart is not value right now. Walmart is very expensive at these upside levels here. And what people are going to do is the same thing that they always do, right? So what they do is they look at stocks and they're like, oh, this is performing very well right now. I should buy it. Like Walmart is up what? Since November, it's up about 30 something percent. Which, yes, it could witness continued upside, but what is the main reason why so many people are so scared right now? It's because they bought charts like this on those high-flying names. Ooh, that's interesting. That's a bank, I believe. Or is that a REIT? Oh, no, airline. Yeah, I like that. It's they bought charts like that and just thought that those moves were going to continue forever. And what I've said a couple of times before that I've hinted at that I think we should talk about a little bit more is, like, if the market really nukes from here, these are not going to be saved at all. Walmart is not going to get saved. Walmart will drop too. And the second thing is that if we end up seeing this continued push down to like 67.50 or even, where could we end up going next? It's not on this chart. It's on this chart. 200 EMA on the SPY here, which is what? Like 650 here, another $25 about. On that bottoming that we see, people are then not just going to go, oh, I'm going to go buy Walmart. What are they going to do? They're going to look for things like this. They're going to look for IGV, software. Software is already sold down significantly. It's already at a decent level here. Even if it comes down to the bottom of the zone here, people are still going to hit software. Then they're going to hit tech. Then they're going to hit quantum. That's what they're going to do at those levels. They're going to hit the Robinhoods. That's where the money's going to go after that sell-off happens. So what you have to look at most of the time in the market is that, great, if you were already in Walmart or already in these types of like rotationary moves, that's awesome. You've been able to kind of hedge the downside on a lot of those other different sections and sectors of the market. But it's not the time to do it right now. Like, I don't want to buy Walmart here. It's super expensive, right? Like, if you're going to think value names, the value names better have value to them. Does that make sense? So many people over the last couple of months here have been like asking me about certain stocks, and then I come out and say that that's the dumbest thing that they could do. And now those stocks are like down 60%, and it's like, sure, you can say that like the statements I've made are me being mean, but it's like I try to prevent people from getting themselves into horrific situations. So so we have a couple of next stops here. We have like 67.72 on ES, but you really want to get down to 67.50. That's where we really want to see this market trade to. That would be nice. I'd love that. Just kill it. Because then we can get like free of this just like chop zone. Get us out of here. Right down here, I believe, is where that 200 EMA is. Yeah, it's right around like that 650 area on the market here. So breaking this, guys, would be big. Which I think this might just be the low of day. Yeah. Or it's right at this. It's this low right here. The Thursday, February 5th low. You break that, it's like 675, I think. What is it? 675.79. What's the low here? 675.82. So it was really close. They snuck that down very closely on the SPY. And the thing is, too, like, you're going to see a lot of fear. People are going to freak out. This is what we've been begging for. We've been begging for a move like this because like all of you guys that were around here last year when we bottomed on Liberation Day and we went into the summer armed with the setups that we were in, all of you guys made just like some of the most ridiculous trades off of the watch list of all time. Like, that's what we're looking for. That's why I keep saying like we're in capital preservation mode, just focusing on the post earnings there, because those are the moves that look great. Think about that. We've had like 4,000 or 5,000% post earnings move. That's it. That's all you have to do. So let's check on NEO over here. NEO was looking really good this morning, but again is being dragged down by the broad market here. But what I will say about this chart here on NEO, this still looks really good. Like, this is a very, very nice looking chart here on NEO, especially if it can break above like 511, start pushing through that 200 EMA. And then you're kind of off to the races up to that 580 area. Let's take a look at crypto a little bit too, because Bitcoin is probably looking not good here. Yeah, again, I think a lot of people still just went from it's so over to we're so back way too quickly on that February 5th to February 6th trading session. And I think a lot of people got themselves into trouble. These moves, I don't think were enough to really wipe out everybody and to really see true like apathy and people get really scared and frustrated by the overall market yet. I think people are frustrated and by the market, but I don't think it's quite there yet. BX downside. That looks very interesting. I like that. And then somebody was saying Netflix downside. That could be fun. Ooh, yeah. These are really low already. Look at how much Netflix has fallen. Jeez. What are yields doing? There's a little bit of a bid in the bond market today, but that's not where the bid is, which is interesting. It's in utilities. It's in REITs. That's where it is. I'd like to look at a heat map too. Just to see where everything is here. Banks look okay. Oh, GE is still cruising. That was on the watch list for this week here. Yeah, all right. There's GE Aerospace and Defense. Look at this. So this was one that I included for you guys on the watch list this week. Again, the typical bread and butter setups are not necessarily going to be the ones that we're hunting very much, but when you see the rotations happen, like the Verizon trade, the 500%er that's Visa, sorry. Like the 500%er on this thing, like the boom rip to the upside, or AT&T here from last week, that move, those still can be very fun in this environment. That's where the moves are going to happen. That's why, like, when you look at the watch list, there's a lot different like the tickers look a lot different than they typically would. Like, they're not the normal names that would end up on there. The puts are looking great though. RJF downside. Let's see. Yeah, and then the other thing that's interesting here too is Target was one that we were looking for this morning. It gapped up above the level, never took the top side of the 5-minute opening range there, so there was nothing for us to do on that. RJF. What's this? That I don't like this wick. That's a really tough one to argue there, I think, for me. So I'd love to see some further downside today, like really crush this thing. But this is what we've expected to happen. This is what we've been looking for. What we don't want to see is what we saw back in here, where it nukes and then it just rips back to the upside into the zone. Like, remember, I told you guys, this was worst case scenario. When we were nuking like this, I was like, all right, well, if I want to like outline what would be the worst case scenario, what I wouldn't want to see, it's this. Because then it's just like, all right, now you're back to square one, chopping around in the zone. Now we're back at the bottom side of it. That's good. Uh-oh. I think my computer's freaking out. I think it'll be okay, though. It's losing its mind. RTX, how's that look? Hold on, I gotta do something here. That looks good. About Bmnr, it's the same thing that I've been talking about. Like, here's exactly, remember, if you go back and watch the videos when we were talking about Bmnr and Ethereum, it was very straightforward. It was, if we can clear, because to me, Bmnr is just a proxy to trade ETH. I think that if you time it right, you can get some decent longer term entries if you're going to see some bullishness out of the crypto market. But it's really all it is just a proxy to take advantage of the movements in the crypto space. If I'm bullish on Ethereum, again, I'm just buying Ethereum. I think what they did with the Mr. Beast stuff was pretty stupid. I think the one argument that people have made about the Mr. Beast like investment there is actually the thing that Tom Lee and Bmnr said that it was what they were not doing. Like brand awareness, like trying to get like Ethereum and Bmnr in front of the eyes of a lot of people, which quite honestly, they have no money. Like the audience of a Mr. Beast viewer typically is going to be on the younger side and doesn't like, they're not working. So that I don't like, especially when you have somebody like Tom Lee out there that says, oh, Ethereum could go, let's say 100x. But then you're looking at a potential like private investment that could go 10x. It's like, well, if I'm looking at something that I wholeheartedly believe can go 100x versus something that I think can go 10x, I'm going to go with the 100x thing every time, especially if that's what you like, you're a treasury company. So that I don't like. But just generally here on Ethereum, like when I was talking about this one up in here, it was like it's looking good, but until you get clear of this 200 EMA, you can't flip medium-term bullish on Ethereum. It's the same thing that we were saying with Bitcoin here, where it was like, okay, you broke to the top side of that prior all-time high zone, but what you need to see next is a retest of the zone and the buyers to step up and hold that area. When they didn't, it was done. It was like go time to the downside, which is where that 70,000 like initial target for Bitcoin came from. It was like, okay, well, if we end up selling to the downside, what could we see? Well, we have this big range of consolidation here that we were trapped in on the weekly and monthly time frame in 2024. So the top side of that area was right around 70,000. So that was a good first area to start looking at for Bitcoin to start bouncing. But you easily could slip down to the bottom side of that area, which is just below 50,000. But then when you look at that, and Ethereum is pretty much the same thing, you can't then expect Bmnr to go up. It wouldn't make sense to, right? So there will be a time for it over the next couple of months, but it's not now. And that's why, like, when a lot of people on the live stream were asking me about Bmnr up here in the 50s, I was like, stay away from it. Like, it's not, you don't buy these things up here. Like it's gonna end up in tears for most people. The problem is that especially with something like a Bmnr, it just ends up in like this like cult, like echo chamber mentality where people are like, ooh, press target this, world adoption that, and it's like, okay, but what you're doing is you're trying to basically put a longer term thesis on something and overlay it to a really short time frame. And the short time frame was saying, no, you don't want to be doing this. So right now, this chart's not looking good. It looks like you could easily see more downside. Oh, I think you got a little bounce a little bit here in the market. Gurn still going? Turn Gurn. Oh my God, look at Gurn. What are the names on the watch list? Touch the level but close below. Do you want to close above? No. Yeah, Daniel, you can, if as long as it touches the level. Remember, I mean, you're not going to be taking it like immediately at market open. So like if it does that, you have to wait for the 5-minute opening range. But as long as it touches it during market hours, when it's not like immediately after market open, you're good to go. Gurn looks great here still too. Yeah, that looks great. Turn and Gurn. Turn, I don't think ended up ever going. There goes the market bouncing back up here. But again, like even on these like aggressive bounces here, do we really have faith in these moves? No. 10 minutes ago, but not market open? Yeah, what was it? Oh, SNCY. Yes. SNCY. I liked how that looked. I really like how that looks. That looks awesome. Chain kind of sucks unless they're weeklies. I think that'd be more of a shares trade. That looks way better for a shares trade. Sun Country Airlines. That looks good for a shares trade. But again, is that something that we want right now? It's like, okay, maybe. It definitely can go. Just be very careful with the risk. I mean, this is just still like really declining volume. There's not really much going on yet, you know? And like, yeah, market's bouncing a little bit here back into the zone, but it's like, do we trust this? I mean, even if it were to come all the way back up to like 68.60, are we going to like really be like, oh, great, the market's back? No, because look where we would be. I hate when that happens. Look where we would be. We would just be right still towards the bottom side of this zone. Like the zone, like not the zone, but like the range of consolidation. You know? Yeah. The value bid is fading too, which is interesting. Yeah, and remember what we talked about this morning on Signal where it like flashed up, broke, and it was like, I need to see more out of that. For Gurn? Yeah, good. Gurn's a great one. What's that first target on Gurn that we were talking about? It's like 190, I think. Yeah, it's like right around 190, the start of the gap. So you got a little ways to go there, but that's still what? I think it's like a 1 to 5, the first target. Something like that. Yeah, 1 to 5.67. That's great. That's great on that move. Yeah, 190. And then again, for those of you guys that still got to jump into LTMP with us, that link is pinned to the top of the live chat. I will throw it in the chat for you guys here too, but make sure you guys use code February when you hop in, because that'll give you your first month for only $1 a day. And I think what is it? Tomorrow and Thursday are going to start heating up with the post earnings again. That's going to be fun. That's going to be very fun. Like, you guys saw them last week, the week before that. We're just going to keep hitting those. Those are going to be where our main focus really goes. So we'll see if we can crack some new lows today, but it's just like this type of action in the market that you're seeing, where it's like moving down aggressively and then aggressively ramping back up, is just literally, it's like the lowest quality conditions that you could imagine. Remember, the danger of what the market can do that creates a lot of danger is not significantly moving down, is not significantly moving up. It's flatlining in this big range of volatility within these zones. That's danger. That's when you want to really be careful. Gurn looking awesome. Look at that. Did Oracle completely invalidate? Yeah, I mean, okay, we can keep looking at it, but I think it's too early for software. The reason why it's on the watch list is that if we were to see that snapback, because remember, the other option in this market is a most hated rally back to the upside. It's much less likely, though, in my opinion, to actually see that play out, where you just then end up seeing that slow grind up, which you can kind of see it by the action here today. There is no slow grinding. It's whipsawing all over the place. And you keep seeing that every day, which is just telling me that's even less likely to happen. It's still possible, but again, what I'm thinking about is, okay, if that happens, what could end up really getting moving to the upside off of that? And it's software. And Oracle already has a setup. That's why we would even be looking at that at all. What was the other thing that we were just looking at that looked like it wanted to break? Oh, GE. Yeah, that looks interesting. These aerospace up. Where's SATL? Are we getting round 2? No, this was one of the best trades I've ever handed out to everybody. A 1 to 123 risk reward trade. That was disgusting. Risk 1% of your account, make 120 back. Bang. Gold was a great one too. I don't know if I have it up on here anymore. But this was the entry point. Stop down below here. And just rip City up to the highs on the daily. The weekly chart was even better on this thing. You just get this break and it just... Oh, wait, that's not even it. This is it right here, actually. It's from down in here. It's not from up in here. It's from down here. 316 all the way up. But then again, you got to fall back on, okay, where is the money actually flowing? You've seen it go into utilities, which are now losing the bid, which is not great. You've seen it go into REITs. And the banks, I think, are looking okay today. Like, where's JP Morgan? JP Morgan's up. Where's XLF? XLF is moving up, but that's still a horrific looking chart. Just a horrible looking... Oh boy, my computer's losing its mind. I'm going to have to delete a lot of stuff off of it again. Look, we're just chopping around at these lows. You bait it down, maybe you get a little bit of upside here, but the overall tilt is going to be to the downside in this market. SoftBank dissolved share stake in Nvidia. Okay. How about Netflix? I mean, Netflix looks horrible. If I never restart it. No, I know. This always happens with these. It's also, I have a million things, probably like video clips, stuff like that downloaded onto this thing from like recording videos and stuff. So I just gotta delete those and it'll be fine. Netflix, I mean, looks decent to the downside, but it just looks horrible here. Netflix in the gutter. But this is a great example of like, if we end up seeing this nice move down out of the market here, where's money going to flow after that? Well, I mean, we're probably going to see some ridiculous setups in Netflix over the next 4 months. I don't think it's going to be a year of chop. I don't think that. Because the overall investor base now in the market is, in my opinion, not passive enough to let that happen. Just think about that. It's like people are kind of forecasting. They're like, oh my God, could the market chop around for a year? And it's like, theoretically, yes. But you have so much more activity in the market that if that starts to happen, it's people are just going to take their ball and go home. And they're just going to be sell. People aren't just going to sit there and wait, you know? Like even you guys that are like some of the most, let's say, well-behaved, like still don't have patience. PayPal? Remember, I don't really like earnings gap down bases, but it could be an interesting one. So we got the hedges on. We're just waiting. We're just waiting to see what happens. I think XLB was looking really good. No? What was it? XLI? That was moving. But again, also there's nothing hitting the feed either. There's nothing coming out of the newsfeed. Billionaire hedge fund manager expects U.S. equities to underperform in 2026 and is short the U.S. equity market while going long select international stocks, especially Latin America. That's a dollar weakness trade. That's what that is. That billionaire, what's his name, Rob Citron, is expecting the dollar to trade lower. That's going for things like BRZU, Brazil, which honestly looks not good here. Mexico, which looks decent. South Korea, Koru. Maybe China, too, with yen, but that's not looking too hot there. But you can see, also out of the market, what did we just do? We came right to the bottom side of this zone, the last point, and we bounced within like 3 cents of it. That's that next line of defense out of the market where this alert is. If that breaks, I think you're going right to 671 here. And then you could be on your way to that 650 down here. BBDO weekly looks really good. I don't like that daily, but the weekly, yeah, that looks good if it tightens up over the next few weeks. Let the moving averages catch up. Again, it's just sit and wait territory. That's all this is. Okay. Waiting for Pltr to drop to the 90s to buy it. If the market drops, it's going a lot lower than that. Not a lot, but like it would go to the 80s. You'd go back down to here. Palantir is actually a decent downside setup here, I'd say. 126 right there. Yeah, market's coming back up a little. But again, it's like, why trust it? And even if it, like I was saying before, even if you get back up to here, what does that actually do for anything? Nothing. It does nothing. Is ARM? I thought it was still looking good. We can look though. Yeah, ARM's still fine. But again, it's like, it relax with the, oh, is this a move? It's like, hold on. If it is, very small. It doesn't mean, like, this is not the environment to go slinging things around. The main focus is going to be on post earnings. But yes, that does still look very good. But don't try and treat this market like a normal good condition. It's not what it is. By Neo, I like Neo here. I like Neo here a lot, especially after they announced their first quarter of profitability ever, especially with the chart that you're looking at here. If the market nukes, though, it's going to go down with it. But it looks good. I think if you get above 511, I think that thing could rip through the 200. I'm looking for something on the feed. Here comes the market. And that's what I think is going to trip up most people in this environment. Like, you're just going to see it bounce off the bottom side of the zone, come back, like the range, and then start moving back into the range. And people are going to be like looking at it on a small time frame and being like, oh yeah, we're back. And it's like, no. It'll be very obvious when fun time is back in the market for a wide variety of different factors. You'll see the sentiment shift. You'll see different moves starting to follow through a lot more. You'll see more of these big trades. It's like, what is that now? No. Again, like you could move this thing up another 30 points or even to the high of the day, and you've done absolutely nothing to convince anybody that this thing is ready to make any significant moves back to the upside, in my opinion. I think you're still leaning towards the downside in this. The post earnings should be fun this week, though. I mean, we've had a lot of good ones recently. Where's let's see, what do we have for tomorrow? After close today? Kenview maybe. Palo Alto could be interesting. The software names have actually been fun on the post earnings. ADI, Garmin tomorrow morning, Fiverr maybe. But then you've got like Carvana, DoorDash, Figma, eBay, Walmart Thursday, Lemonade, Klarna, Wayfair, Open Door, Texas Roadhouse, AXTI. Like, there will be some fun ones this week. This week's a little bit slower, though. But that's going to get interesting, too, because we're going to get towards the end of, like, post-earnings. And then it's going to be like, all right, if the market hasn't balanced itself out by then, it's just going to be sitting around doing a whole lot of nothing. And just waiting. Waiting for those good opportunities to come back. I'd like that Palantir downside setup, though. below 126. I like that. Yeah, slow, boring, there's nothing going on. There's GE. I like that. That's a good one. It's already up a lot. That's an interesting one, though. What's the chain look like on that beast? Yeah, that looks good. It's already up a lot. Made a big move today. Be careful with it. Again, just like everything. Where's like Lockheed and Raytheon? I think, oops. Yeah, Lockheed looks decent there. Yeah, it still looks good. But again, if you decide to take it, you gotta be so careful with it in this environment. Because the moves that'll fire will be huge, but so like you do not have to be doing anything ridiculous. Let's see. Oh, and then tomorrow, guys, is I believe the last day that the Apex 80% off sale is going on. So if you guys still need some more of those Apex accounts, again, the link should be in the description somewhere, but also just use code VIX if you guys need some. Market's moving back up. But again, where are we? Nowhere. Where's Wolf? I don't know about that. Is Oracle holding on? Yeah, kinda. I mean, I'd like it to get back above the 10. Gurn? How's Gurn looking still? Oh, yeah, look at that. Gurn is looking great, guys. I mean, weekly and daily breakout there, it looks great. GE pushing. That's nice. But that's getting helped out by the market. A lot of things are. Let's see. Oh, where is this? Yeah, XAR. I mean, didn't we talk about this weekly chart last week? Yeah, that looks like it wants to go boom a little bit here. Your UA freebies have come back to life? Oh, from the post earnings? Oh, yeah, that's looking good there too. Here the market comes. Again, just careful. Don't be one of those individuals that goes from, oh my God, it was so over an hour ago. Now we're so back. It's like, because we're not. Look at the larger time frame. Where are we? Oh my God, Sam Bankman-Fried is tweeting, FTX was always solvent. No one in the world is more qualified to comment on this than Dan Chapsky. Dan was head of data science at FTX. When the bankruptcy lawyers wanted to know if FTX was solvent, Dan was who they hired to calculate the answer. In a new sworn declaration, Dan tells the court what he told the lawyers. The crazy thing about FTX is that, like, even though they were doing some fraud, the investments that SBF made would have, like, if they just let him go until today, they would have made so much money. So much money. What about CXAI? Let's look. No, this is garbage right here. This is a penny. What are we doing here? What is this? $7 million penny stock AI company that's drilling into the floor? Not for me. Not for me. You sold VRT after earnings, now you're waiting for a drop. If you sold, you should have had a reason to sell. You know? I hope you guys are listening to a lot of the things that I say here. It's like, would you ever hear me do something like that? Like, oh, I sold it, now I'm just waiting for it to drop again to try and time the market on it. It's like, I think that's a little bit of a waste of time, you know? Because we're going to be doing what, like, our normal behavior in the market. It's like, like I say all the time, there's a time and a place to be taking action, and it's not now. You know? SBF is tweeting from prison. It looks like it. Like, VRT has had some great performance over here. It's like, if you were in down here, sold it up here, great, book the win and run. That's such another thing that, like, retail just loves to do, and I don't know why. I don't know what psychological, like, thing this is, but every time you see either one stock go absolutely crazy, like Open or AMC and GME and a lot of those other ones, what everybody loves to do is just like, oh, it's going to do it again. It's like, it doesn't have to do it again. It already did. Why are we looking for it to do the same thing again when there's other opportunities out there in the market, you know? And also, it's like, well, like, how much would it have to drop? And then the problem is that if it were to drop from here after good earnings, is it actually worth buying? You know, PLD, I believe that's a REIT, isn't it? Yes. Again, these REITs are looking very interesting. So yeah, I mean, I like the REITs here. They've been running up. I mean, it's just a symptom of what's going on in the market, this risk-off behavior. But does that make sense? It's like, what? Like, if you made the money on it, like, why are we looking? Like, when I sell something, usually, I'm not looking at it anymore. Yeah, you bought at 113, sold at 231. Right. Why are we trying to go back to the watering hole there? You know? Like, you made a great move. Keep the cash. Keep the cash. There's going to be more opportunities coming down the road. Why does it have to be VRT, you know? That's like my question most of the time when I see these, like those, like that type of behavior. It's like, why does it have to be that? Is it like some sort of like comfort that it's already been made on there and you feel comfortable with that one? Like I don't understand. Like when I sold, let's say, my Palantir, I wasn't looking to buy it lower. I was saying, oh, I'm booking the profits on a really great position and going to look for the next good opportunity out there. Not let's just now look at Palantir now that I've sold it. Because when you're selling things, it should, like we were talking about in the mastermind with you guys, you should have a reason for it. Like it's thesis breaking, there's something going on in your portfolio. Like there's always a reason to be selling, not just, oh, the stock's up, you know? Unless it's so aggressive that, like in Palantir's case, you know? Does that make sense? Like that wouldn't be the type of behavior that like I or anybody else, I don't think that's done this forever would engage in. Like you made a really good investment of VRT at 113, sold at 231. That's great. Look for the next one. Market bat just ping-ponging in the zones today. Look at us. Going to ping pong land. Look at GE ripping over here. There we go. Yeah, I like that Palantir move down below here if the market cracks. Which we also have this zone up here too. I'd be careful of this. But think about it. It's like, oh my God, we just went vertical in the market. Things must be going really well. And then you look at it and you're like, oh, we've not gone anywhere, right? We're flat on the day right now. And you're seeing it, the bid, not like if you look at like, where's NVIDIA right now? It's up 0.6% here. Like the move is like, it's more going to be in terms of like the safety names still than it is in like big tech. Expensive to you, that's why you sold. Right, that's fine. That's fine, but like if it's expensive and you think it's getting wildly overvalued, it's like, okay, if you sold all of it, that's usually not what I would want to do. But that's just a learning experience where it's like, okay, next time if you think that and it's a little overvalued right now and you'd like to be able to maybe get your position, like some shares a little bit lower, it's like you don't have to sell all of it, you know? Hims at 16 a buy, I don't like Hims. Hims looks like it's about to get nuked. I think Hims made one of the biggest mistakes that they could possibly make over the last 3 weeks, which was spitting in Novo's face and Lily's face. They're like, no, screw you guys. We know this is illegal, but we're going to do it anyway because we think we're better. It's like, no, you can't do that though. The FDA and the regulatory authorities are going to crack down hard. Don't be thinking that just because it's like you've done it in the past, that they're going to let that behavior slide again, because it's not. Like this thing could easily go way lower from here. And it's like the reason why we were talking about Hims in here is because one, you were coming down to a nice area where it could like this you had a nice little zone of support here, but that was if they could shift out of it with announcing a Novo partnership. And what they did was say, no, screw you, we're not gonna do it, we're gonna do our own thing. GME downside, yeah, I mean that's not really a setup there yet, but I could see the argument for that. IO and Q was one of the best ones over here. The breakdown of the 200. Actually, RGTI was better because the break actually came right at the break of the 200. Right here. This day? Oh, that was dirty. GE is ripping over here. Hello. Market right back to the zone. Just bounce in between. You came literally, if you look at SPY, look where it came to. They just didn't want to let it go today. Like the low here is what? 675.79. The low of today was what? 675.78. So it did technically break. It just tapped it and went whoop right up. Right up. Do I think Spotify is still too expensive? I don't know if it's too expensive or not. I'd have to look at the numbers on it. You could get a nice little post-earnings consolidation setup here, though. But you also have to think about, okay, where's the market right now? It's barely off of the highs. This isn't really the high probability buying time. You get down through here, then we can have that conversation, you know? D-nut. Yeah, this one. 3? Wait, which one are you talking about? Was it from 4? Oh, way up here? I gotta look at this on a different chart because I don't see that. Let me look. I don't see it, that anywhere. Yeah, but think about it. Where are we? We're right back, still right here. We've gone nowhere. And GE's off to a nice start there. Yeah, I mean, the zone ping pong is kind of crazy here. It's just ping, 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 ping. Weekly? That would not be weekly downside. That's still in an uptrend. That's just the shift of the uptrend. That didn't move down, then flat, then down. Ralph Lauren. It doesn't look bad. It doesn't look bad. Gee, hello. GE over 330. Damn, that's a fast move on that thing. That's typically a slow mover. Jeez, guys, that thing's going. That thing is really going. Hello. That's nice. Ooh, what did Nikki Leak say? Two different measures of business inflation expectations have essentially returned to pre-pandemic levels. The Atlanta Fed survey, which asks businesses how much they expect their own unit cost to change, is back at 2%, right where it was in 2019. That's good. I'd say that's pretty positive. See, I don't know if I would go, like, if we were thinking intraday, if I short off this zone, I'd probably wait for this one from back here. I'd probably wait for this right in here. You do have this as well, but you could have a little short squeeze here, and they're just waiting to re-add a little bit higher. Who knows? This is just like ping pong city. Let's see. How'd you guys do on the like button today? You did all right. You did all right. Make sure you guys are hitting that like button on the way in. It makes it easier to find the streams too if you guys want to come back. I do these every day for you guys at 10:30. Friday's public live day though. I come on for you guys at 9:15. Usually that time slot is for what do you call it? The LTMP group. Lulu downside. I don't hate that. It's almost more of a base though. It's almost more of a base. But I see what you're saying there, Diego. That's not bad. Is it going to happen after NVIDIA's earnings? Well, I would say, when's that? Yeah, it could. The other thing that you got to think about too is that you're getting into like tax season. So if I were to give a time frame as to when we're like really fully done with everything, it's after April 15th. Or whatever the day is this year. I think it's the 15th. That's when I think we can kind of bottom out and then look towards like the summertime action that we typically get. I love the sell in May and go away saying, because it's just not true. Like, it's most of the time when you see like really nice moves in the market happen, they happen then. Last summer was the best, yeah. That Neo trash every day goes down. Any hope? Why? It doesn't. Like, unless you bought it. What, like, again, guys, this goes back to, one, that's an amazing looking chart right there. Two, like, the only thing about Neo that you were looking for to keep you like interested in Neo was everything that I've been saying over the past year, which is they need to hit that profitability goal. They did. Okay, now you get to look at kind of the next, like, the roadmap for like the next year or two, what they're about to do. The market conditions are horrific right now. It's also Chinese New Year. It's like, it's gonna do this, you know? But it goes back to what I'm saying. Don't, like, if Neo, like, when it did, don't be, if it goes from $4 to freaking $7, don't be buying it at $7 when it was at $4 a little bit ago. I mean, I own, what, 4,000 shares of this thing at $4.55? This thing could do whatever it wants. I'm not really, you know? Sofi insiders are buying. That's good. That's a good sign. But the thing is that they're buying, I don't know. They're probably buying based on like the valuation, I would say, of what they think the business is, I'd say, which is a decent sign. The problem is that it's not macro based. Like, it wouldn't be a macro based thing that they're doing. I like it. I've got a really, really nice like SoFi position. Own it at 660. That's the point. It's like being able to, that's why, like, when I talk about with you guys, like when the markets are going up, it's like, no, you don't touch these things here. You touch them when they make the most sense, when you see these pullbacks in the market, when you see these big bases, because then you end up in situations where like you've bought something that you probably shouldn't have at the highs because you're like, oh, the market's just going to keep going up. And it's like, well, over time it does, but the amount of volatility that you could witness and realize in your portfolios, there's another rejection off of the zone. So, all right, guys, it is 11:30. We are going to be wrapping it up for today. I'm going to throw the link for those of you guys that still need to join us with an LTMP in the chat here. Again, make sure you guys use code February, get your first month for $1 a day. Again, the market is not doing anything that we have not expected. It's going to be chop zone with a tilt towards the bearish side. Do not let yourself get caught up into the, oh my God, there's aggressive candles happening. That means we're back. That does not mean that we're back. Default to the higher time frame and say, okay, where are we actually and what does this look like? This still does not look good. You're seeing a lot of volatility, a lot of chop here. Careful. I think we're probably within the final stretch here of this crazy movement, but it still needs to finalize, and you need to see that crescendo of like probably a move down in the market here. So we're going to be set up nicely for the rest of the week for post earnings. I hope you guys are excited for that. For those of you guys that are hopping into the group, that is the last video within the Swing Kings course. That's a very, very fun one. We've been nailing. This has been one of the best post earnings seasons ever. There have been, 4,000 or 5,000 percenters off of the post earnings moves. They've been disgusting. You guys saw Coinbase on Friday. That was filthy off of that move there. So I will see you guys tomorrow. I might be able to get some TikToks and YouTube videos out for you guys today. Tomorrow, probably going to be back with some YouTube videos for you guys too. We're going to do a lot more content on Instagram and TikTok too, so make sure you guys are ready for that. YouTube Shorts as well. So, folks, have a great rest of your day. Don't do anything silly. This is just the market being the market here. All right? I will see you guys later. Peace.